So be here. Okay. Good morning, everyone. Thank you so much for joining myself and Brent Farley out here, who I'm going to ask to introduce himself in just a moment. Brent, actually, why don't we go ahead and start there? We'll circle back around to me and then have a little bit of context about anyone that's out there that's joining us and why they might want to be interested in this topic. So why don't we begin with you, kind sir? Tell us everything. Tell us your astrological sign. No, we need to know it all. Go.
Well, thanks for having me, Stacey. It's glad to be here. Glad to be participating in this event. So my name is Brent Farley. I'm a financial services attorney. We do regulatory work for financial institutions, also for fintech companies. So on the fintech side, we help the fintechs get up and get started, help them with the regulatory licensing if it's needed, help them with their agreements, their legal structure, things like that. On the regulatory side, we have about 40 financial institutions that we work with fairly regularly. So we do everything from outside general counsel work to lending, payments, deposit, treasury services. Started in banking, commercial real estate, worked as compliance officer, and now I do work as an attorney.
Did not know this. Go ahead. So you have that commercial lending background, which is such an area, and I'm sorry to interrupt you, but it's such an area where we do tend to see a lot of outside counsel work on commercial agreements. So that's a fantastic path. So you were a commercial lender, compliance, and then now you find yourself with the credentials, all the things.
Yep. So deep into banking, with in-house bank experience, really enjoyed the work there, working with primarily with community banks, and a larger regional bank, and jumped out into a law firm and do work with the same institutions. Really like working with bankers. The community bank people that we work with are usually pretty bright and pretty sharp, really interested in building their communities. And so it's been a pleasure to work with them. Fintech side, it's always exciting to get a new product off the ground, see what people are working on, and see them grow and succeed. We like to see that for our clients.
I've learned so much more about you than I think I even realized. What a fantastic career you've had thus far. I want to introduce just a little bit about myself, and then I want to get into why I had reached out to Brent and why I thought this could be a fun and interesting conversation for anyone watching. My name is Stacey Bishop. If I haven't had the pleasure to meet you, it is now my pleasure to say that we have met. I work today with Fintech Founders, working with, selling, partnering with banks, as well as working with community bankers interested in entering in the embedded banking space and all that entails, selecting vendors, establishing fintech partnerships. So I find a great deal of just joy, and my passion is working between these various groups, similar to what you do as well, Brent, working on both sides of the equation. And I think if I can start there for just a moment before I take you back in my career, let's just recognize that there's power in working in your world, especially on both sides of the equation. If you are drafting fintech documents, I would imagine it's extremely helpful to know what bankers on the other side of the table reading those documents might be concerned about, or the red flags that they might pick up on. I'm not suggesting that it's a completely clean process all the time, but I have been in many situations in the fintech environment in which we're putting language in front of a banker just doesn't pertain to their world. So I'd love to get your just initial thoughts or gut reaction on that.
Yeah.
Reading that right?
Absolutely. So, I mean, the context is really important. So if you're working with a bank, the bank operates in a very heavily regulated space. I think if you were to compare that, you're a couple steps away from just working in the government, right? So most everything they do has some kind of oversight. There's some kind of process that attaches to it. Depending on the bank you're working with, they might have 2, 3, 5, 6 financial service regulators that are looking over their shoulder, trying to figure out, whether they're doing a good job, whether there are problems surfacing. And so especially if you're a fintech and you're starting into an agreement that might be very complicated and have a lot of responsibilities for the bank, there's a lot of things you have to think about in terms of, what is going to be acceptable for a bank to start with. So if on the fintech side you hand a bank an agreement and it's nowhere near covers the issues that need to be covered, or it's asking for things that the bank just cannot or will not do, then it really extends and protracts the negotiation process. And sometimes the bank will sit back and question, is this the right group? Do they have enough knowledge to be working in this space? And so, having the context, you say, hey, we're going to start a bank fintech relationship, whether it's banking as a service, embedded finance, or something else. Knowing what the bank expects, and then also knowing what the fintech needs to happen on their side can really help streamline the process.
That is so valid. And I hadn't considered that before. I was thinking initially in asking the question that it might cut down on that protracted negotiation cycle, the back and forth redlining, which it does completely if you have the context of both sides. I hadn't yet gone mentally to the fact that it also might prove your legitimacy in the financial services space, specifically in a banking or credit union space. Because we do see this a lot, Brent. We see fintech spinning up that are either coming from different verticals and entering into the financial services space, or perhaps even even further removed abroad in different markets, but in the financial services space. Our environment here is somewhat unique, both at a federal regulated level. Then you throw in the state components and the regulated pieces. If you're just putting a SaaS agreement in front of a banker without having that bank context, I can now see where the legitimacy or the validity of you playing in this space could be questioned. And I hadn't considered that before, kind sir.
Yeah, well, I would also think about, on the bank side, they're looking at fintech firms, and there's a bit of a cultural difference too, right? So you're talking about, a fintech group coming from the software as a service space, and they're trying to enter banking. We're kind of the name of the game in the software space is to move very quickly, to make lots of changes, to grow and scale really quickly. When you go into the banking side, everything is very, if you're working with a well-run financial institution anyway, sometimes banks step outside of this, and it's not necessarily a good thing. But it's methodical, and it's disciplined, and it's grounded in prudence and compliance, safety and soundness. And so you take those two cultures and you have to find a way to match them together. So on the fintech side, you need to understand that there's a process that the bank will go through. There's a lot of discipline and methodology that goes into building financial services infrastructure, and you want that all to run smoothly. Because particularly with people, when people are dealing with their wallets and their money, when those things don't work properly, like payments don't go to where they were supposed to, they don't get there on time, or the loan, loan servicing doesn't work properly. You're getting notices that didn't make sense. It erodes trust. It makes people really angry. So as opposed to other types of services where there's more of an opportunity to fix it. So.
No, that makes perfect sense. And it holds true to something that I've also recognized in my career, and you've stated it so well. People's money, that is extremely personal. It's why I think that I truly believe my own children need to work in a community bank, just like I did. I think that's where you learn to speak to individuals about the most personal aspect of their lives, that being their money, their wallets, and how they're thinking about their financial environment, their financial future. And all of this is incumbent upon a good relationship between the end user, the client, the customer, the member, with their financial institution, and that financial institution providing services and or software that meets the needs of those individuals, by having great contracts. I think overall, if you take it up a level with their vendors and their ecosystem. Well, Brent, I want to step back in time. I hinted at this because it's not lost on me the evolution that I have seen in my own career as it pertains to legal agreements. And hear me out on this. So growing up inside a very large organization, we had we had a fantastic legal team, and they were powerful. There were the general counsel, we had the various attorneys, we had paralegals, we had a whole shop, if you will, helping to ensure that the agreements we were putting forth in front of our customers actually met and held the requirements and the best interests of the company in mind, but
Hmm.
also tried to make things very fair for those organizations we partnered with. So that's the world I was used to. I was used to going and asking for permission in order to change various pieces of language that were
Right.
outside of my control. There were certain pieces that I could plug or play or remove if
Hmm.
approved. But knowing that I had that type of structure and stipulation, it was eye opening when I moved out into the fintech space. And I'll never forget, and working for a smaller fintech, I should say, because when I stepped out working at a smaller fintech, it shocked me, literally floored me whenever I was putting together the first opportunity, the first deal, the first proposal, and I was told to just go ahead and draft it myself. Here's a base template. They're asking for new language. I'm asking if we can put that language in, and to which I was informed, yeah, just go ahead and draft something that makes sense. And I think that was both overwhelming and frightening considering what I
Very
had come
surprising.
from. Yeah, oh my
Yeah.
goodness. What do you mean you want me to go ahead and draft the term language? That type of stuff is a little bit easier, but other types of elements that were trickier clauses that we see in agreements, you had me drafting, then trying to pass it around to everyone to make sure we got a sign off, to make sure that it made sense, when most of those people probably didn't care. They just wanted the agreement out the door and, more importantly, signed so that it can drive revenue. And that is something that I've noticed now working with other fintech founders and startups is not always an anomaly. You have many founders that are just trying to make it work for a lot of
Right.
reasons that we should recognize. The cost alone or the time to get in front of a shared counsel through an
Right.
accelerator, things like these. These are real hurdles that these individuals are facing. So I don't know. Is this a situation where you've seen kind of this wild west approach to fintech founders, like trying to do their job? They're trying to put a good product out there. They're trying
Uh,
to move a deal forward, and they're using the tools at their disposal, whether that's a borrowed agreement from a fintech founder friend, something an accelerator has put in their hands, what good old ChatGPT or others have created. Are you seeing
right.
this, first of all? And then I want to get into the
Yes.
risks. You're seeing it? Okay.
Yeah. So I mean, it may be even more prevalent than what you might think. So,
Really?
uh, I would acknowledge the difficulty. I think it's right to do that. So if you're starting a new company, uh, often you're starting with a small team. You might be two, might
So
be
fair.
five,
Mm-hmm.
maybe 10 if you're lucky.
Yep.
And a lot of times the first folks on board, there's a technical group that's very embedded in the software.
Mm-hmm.
There's often a sales professional or two, somebody who's really good
Sure.
at business development. Not in all cases. Sometimes
Sure.
they'll go to somebody like yourself to kind of help fill that out or
Oh.
round it out.
Mm-hmm.
But the legal component is often out there. The compliance component can be hard to find. There just really are not a whole lot of professionals who are grounded in financial service compliance, and so they can
Right.
be hard to find. They can be expensive, and so yeah, we'll see people turn to Google. They'll go find a template. They'll go pull a form that some other company is using that the company looks a little bit like them, so they'll grab that and they think it might work. Um, over the past few years, it's gotten, I wouldn't say better, maybe a little more entertaining. But instead of going to Google or to the competitor, we'll go to a chat bot, right? So go to Chat
Yeah.
GPT form or to Claude or somebody else, and they'll work on putting together an agreement.
Mm-hmm.
And the thing that's changed between the two is that sometimes the chat bot, it will spit out something that looks plausible, right? So it'll be
Truly.
it'll be formatted fairly well. It'll address a lot of the topics that need to be addressed. But then when you read it, it tends to be really short on substance.
Okay.
It tends to miss a lot of nuance. It tends to really not address the key issues that that it might be calling out. So I might call out some intellectual property issues, but then it doesn't define what the license is, where it starts or where it ends. And so then you have an agreement that says, here's an undefined license, then, it sets you up for a later argument about, how long does this last? What do you really get to use? Do you get a sub-license it? How many users do you get? All those sorts of questions that we would sit down with somebody and ask and make sure that we have structured and thought out and put together an agreement that will hold together.
Can I ask, how
Yeah.
easy is it for you or your counterparts at other firms to identify a ChatGPT and I don't mean to pick on ChatGPT, an AI generated legal agreement?
It takes about 10 seconds.
10 seconds. Okay.
Yeah. So if you're going to use an AI tool, I mean, the use in it is helping you kind of think through the things that you might want to address.
Sure.
So if you're, people are concerned about the legal bill, and that's understandable. It makes sense.
Mm-hmm.
Some things that you can do to reduce the legal bill is, if you're thinking about an attorney, a lot of us charge by the hour. If you can reduce the amount of time that the attorney needs to spend on the project, then you're going to save on your legal bill. So if you know which questions you need to ask already, and the attorney doesn't have to drag it out of you, that'll really help. If you have an idea as to what your compensation structure looks like, to what the structure of the services needs to look like, then we can take that and much more quickly put together an agreement that will work. Whereas if we have 2 or 3 or 4 discussions about trying to drag out of the founder what it is that they want to do for their clients, and then it changes 5 times after we put together 2 or 3 drafts, that has a real tendency to make things more expensive where it maybe didn't need to be. So if you're interested in reducing legal bills, those are a couple of really good strategies for it.
I want to pull on that thread just a little bit. So what I think I heard you saying is it's likely better to use any GPT as a thought partner heading into a legal discussion with an attorney or an outside counsel, someone like yourself, versus, and that'll save you time, that'll save you money, versus using a GPT related tool to produce an agreement and then say, hey, Brent, here's what I've got thus far. I think it's pretty good. Please go through it and make sure I'm covered. Because in that case, you're going back and you're trying to unwind a bit. Am I thinking about it correctly?
You're thinking about it exactly right. So it's often slower to actually go to a completed piece of work and take it and pare it back down and then rebuild it in a way that actually works. So in a lot of cases, if we start with an outline and then we prepare the agreements, it'll go very much more quickly than it would as if we're trying to revise and rehash and reconstruct something that's already been an attempt at putting it together.
Yeah. At some point, I want to get towards the discussion towards the end of our call. I'm sure you're working with a lot of people, as am I, or speaking or trying to help or mentor people that may not feel like they have the funds for any sort of legal assistance. And that's why they go this route. I do want to talk, or at least think about those individuals as we're going through this discussion. There's going to be people that perhaps have some seeded money or have done a raise before, and they might have a little bit more opportunity to spend, even with a small team. But I always also think about those individuals that don't have that opportunity. They are some people that I know and work with today that are trying to make it happen with POCs, trying to land those, trying to land their first seed round. Actually, why don't we just go there now instead of just waiting? What alternatives do those people have? And I'm specifically thinking about something that you and your team have developed, a platform, if you will. So I'm going to give you a little bit of a shameless plug because I love the idea. Can you tell us about it?
Yeah. So we have a platform that helps us generate really complicated contracts. So this, I'll tell you, I'll start with the genesis and then we'll go to how do I work. So we talked about Google Forms. We talked about AI. And so trying to Google and try to find a form, contract, or template that fits what you're trying to do is really hard. You usually end up with something that doesn't meet what you need. It it misses things, it says things that you don't want it to say, and it just doesn't align, and it causes problems down the road. Usually with legal problems, it's not a problem until it's a problem. And then after it has become a problem, it is very difficult and expensive to fix. And so if you get your contracts wrong, coming back after the fact is really hard. Artificial intelligence types tools, it's similar issues. Like, so you can get a contract, it might be a little better than Google form, but when you get into the meat of it, it often doesn't really address the issues that you need to. So we've taken the issue, and so the way we would approach it is, if you have an agreement, if you look at any kind of set of agreements, like you're looking, we've done this primarily for commercial lending documents. We can do it for other document sets. But if you take an agreement like an MSA, a technology services agreement, and you deconstruct it into its components, so let's just say clauses, or maybe a little bit more, and you tie the clauses to logic or to questions, you can essentially rebuild an entire document set from scratch very quickly. So the way we do it is we tie it to questionnaires. So basically, you answer a bunch of questions about the terms and parameters of the agreements that you're working on, and the software will construct the agreement from start to finish. You know, it might be a 10-page agreement, might be 20, might be 30, might be 80, might be 150-page document set, right? But instead of spending all a week or 2 weeks or 8 weeks putting it together, you spend an hour or two, because you just collect the information about the terms and the parameters of the agreements that you want, and the software will put all the pieces together. So if you think about it like Legos, right? So if you take, you can go to the store, you say you want a car, right? You go to the store, you can buy a little Hot Wheels car, and it's a car. Or you can buy a model, and you can build a model, but all you have is that car, or you have that model, now something else. When you go buy a big tub of Legos, you can build whatever car you want.
Right.
So it's a similar concept. So if you take the agreements and you break it down into pieces in a way that you can put it together really quickly, then you can really reduce the amount of time you're spending on the contract. And then not only that, is if you have a sales team and you have a complicated statement of work or proposal process, you can deconstruct that, right, into pieces. Yeah. And then you can hand your sales team a tool that will let them rebuild the document set for you.
That's amazing. So this is in the hands of, let's say, a banker in this scenario, correct? Or a commercial lending team,
right? These
agreements, and the big difference, the two big call out, well, the three, flexibility and customization. I think you mentioned being able to build anything you'd like because you have the appropriate Lego blocks in which to do that. Secondarily, you mentioned the fact that you can move quicker. So I'm assuming for these commercial lenders, you mentioned first of all an 8 to 10 week time frame. That's what you used to see. That's what you see right now in some banks.
Often, if you're putting together like a bank fintech agreement or just an MSA, we've seen law firms take that long. We've seen law firms take longer. Sometimes we'll see on the opposite side, the counterparty will hand the agreement to a legal team that'll sit on the attorney's desk for 2 months before they even open it up, right? Either because they're just
slammed,
or they're just not getting to the work that needs to be done now. Coordination, busy, combination of the two.
What about for commercial lending agreements? And I want to dig back into that in a moment, but commercial lending agreements, what do you see as a common range for attorney prepared docs, either based on your past or what you've seen other people do, not using a platform like you offer?
Yeah. So there are some platforms available now that will generate commercial lending documents. They're template based. So it's a little bit like going and buying the Hot Wheels car, the model. It fits a small universe of loan types. Some banks will use that kind of software in-house to prepare loans up to a threshold. That might be $750,000, $1 million, $2 million. And then after that, they're going to go get a legal team because they see the risk as too high. When they go out to the legal team, the thing is that the cost range is huge. It might be a couple $1,000, might be $15,000 for a loan starting after $2 million. If you want up to 20 million or more, then maybe you're looking at $15,000 to $60,000 per document set, depending on how.
That's amazing. That cost to book a commercial loan, that's staggering. I'd never known that type of figure before. obviously they're very intense, they're very customizable. What kind of time frame in those larger ones? Are we talking 8 to 10 weeks, like you mentioned? Or are we
Uh,
talking?
it can often be several weeks. I mean, but by the time you get a loan that big, usually the deal is fairly complicated, and so you're not looking at 5 or 6 different
Quick.
documents. You're looking at a dozen or more, and they're all pretty lengthy. And so,
Yeah.
if you think about it, you're going to have a lawyer sit down, and maybe a paralegal will help with this, and they have to go through and even just fixing all the naming conventions in the documents and putting the party names in. It takes a long time, just because there's so many documents and places to change all the things. And so, when we look at issues like that, if you can have software say you can answer a few questions and then you know what the document set looks like, and then you can fill in all the parameters for the rate, the term, the guarantor structure, the borrower structure, and all those, the collateral structure, all those other little things. By the time you answered, a questionnaire that might take you 30 minutes to an hour, 2 hours to finish, you can build out a very large document set without having to sit and manually enter in all the information and then, have somebody go back and make sure what was done correctly without typos or, leaving the last borrower's name in there, things like that.
So this is fascinating. So I want to go back to the 3 things that at least I was tracking: the customization that's available with a platform like you've created, in which people can build their own cars or airplanes or boats or whatever relative to a commercial agreement. Sounds like a secondary value proposition is simply the time savings. So thinking about the time from application of that commercial loan to funding that commercial loan can be greatly compressed using a tool built specifically for attorney prepared commercial loan document production. But the third thing that's just blatantly obvious, and there might be others, but the cost savings of that. A couple thousand to 15+K for one loan booking. That's not nothing, as they say around my neck of the woods here in Missouri. So that's staggering. And that's a piece that I think everyone hopefully is going to take note of here if you're a banker listening to this conversation. Just for my own edification, Brent, what do you guys call this platform that you've developed?
We call it Bank Docs Pro. So we have it. It's in place. It's ready to go for commercial lending. We've been showing it to clients. We'll have a broader launch probably later this fall. So if anyone's interested in early peak, we can certainly show it off, and it can be used currently. We just haven't done a formal launch yet. We're getting ready to do that.
Okay. Thank you for that. Thanks for giving us that insight. I do want to take it back, though, something that you mentioned, which is so insightful. You mentioned that sometimes bankers will produce their own commercial loan docs in-house piece of software. That's exactly what I've seen over the course of my career. And at a certain juncture, and it commonly is amount or complexity, bankers are self-aware enough to know, wait a second, we need some additional help here. We need some additional eyes on this agreement because of the stakes involved in the agreement, because we're going to be making quite a bit of interest on this. So it's what's fascinating to me is that we also see fintech founders perhaps that are trying to move fast that might not yet have that same, I don't want to say self-awareness, but they haven't encountered that same need.
Maybe it's a risk-based judgment. Yeah,
exactly. How do you have any sort of rule of thumb any founders should be thinking about? Like, hey, is it just a blanket statement? If you're going to be working with banks or credit unions that are so heavily regulated, you probably need someone like us to oversee that. Or are there any scenarios in which the GPT agreements can work? I think I know the answer, but
rules of thumb. So that's tricky. Rules of thumb always have exceptions. So I would think about
that's the attorney coming out in you.
I would think about it maybe in two lines. One is kind of cost, and one is impact. So if you're looking at an agreement and you're counting on it to generate, you'll pick a threshold. I don't know if it's $20,000, $50,000, $100 million in revenue. Right. At some point, you're really going to want to protect that revenue stream. right?
For sure.
So if it's just a $500 contract, you might be willing to take a chance on that, right? But if it's, tens of thousands or hundreds of thousands, millions of dollars, you probably should have somebody take a look at your agreements and make sure they're rock solid, so they will stand up and you can collect the revenue that you expected. The other thing that I would think about is impact. So we're going to put an agreement in place, and today it's a $100 contract, but we're going to do 5,000 of these.
Mm-hmm.
That's a large impact. Maybe we should have somebody look at that. Or we're bringing on a vendor, and this is janitorial service.
Okay.
Well, you're probably okay to not go to the attorney. I don't know. There's always an exception to that. So
Sure.
somebody might come find me later and say, "Hey, this problem happened, and I really wish I had an attorney." But that versus the software you're relying on to keep things secure. Right. So you're operating a regulated environment, you're handling personal information. You've got a 2-page agreement with your cybersecurity folks. I don't know. Maybe you should look at that. Think about, cost. Think about what is the broader scale impact of what we're trying to do right here. And then that should give you an idea as to, what is the risk? How much should I involve an attorney? Where would it make sense to do that?
I think those are good guidelines. And let's be honest, if you're someone like me that has been working at fintechs, or I'm working with Fintech Founders, using the time having the conversations with an outside counsel, normally you're able to get a lot of work done that can be then replicated for future conversations and future agreements. So in many cases, we're talking about an upfront investment where, I think you mentioned earlier, you can use a related GPT or Googling or another founder friend's documents to do those thought exercises as it pertains to your own business. Mm-hmm. Take it to a fintech attorney or using a platform, and then drafting something that becomes a reusable type of asset for the business with perhaps minor tweaks involved. Fair to say?
Right. I think that's true, on many fronts. So if you're talking about employment, you're talking about securities type documents, company agreements, you're talking about subscription agreements, you're talking about the bank fintech partnership type agreements, or just a software as a service agreement. A lot of those things you draft them once, and then 90% of it or 100% of it can be reused down the line with other deals. And so there's an initial period where you're building, where we would sit down with the client, try to understand the business and where they're trying to go. And so we try to help build a framework that the business can sit on now, and it can sit on for time to come, at least as far out as we can see. And so then we produce things that can be reused, produce things that can be reused with a little bit of light modification. But generally that's exactly what we see. So initial upfront investment, lots of work, but after that, it tends to be not as involved and not as difficult to produce the next things.
Amazing. We do have a couple of comments I'd like to bring on to the stage, if you don't mind, kind sir. Yeah. Let's show this one here first from Matt. Hey, Matt, how are agreements acknowledging the history and trying to smooth that element, if at all? I wonder, Matt, are you speaking? I'm not certain when this one came through. Is this the commercial loan agreement, or Brent, does this one? Do you have an answer for this with the context that we have?
Are you acknowledging history and trying to smooth? Well, I can try to. I'll answer the question I think maybe you're asking. So a lot of times there'll be an opportunity to negotiate with a bank or fintech partner, and the negotiation might go a particular way, and so you'll adjust the initial agreements you had to align with what the bank wants, to align with what the fintech wants, and then yes, absolutely, certainly you learn from that engagement, and then you know better how to react to the next one, so you might record it. Sometimes it may make sense for maybe a sales team or any group that's selling a complicated product to produce what we call a playbook. So you say, so you have your initial agreement set, and then because you've done this 5 or 10 or 15 times, what questions people are going to ask, where they're going to push back on. And so then you have some backup provisions that you find acceptable changes to the agreement. And so then you have kind of a process. You say, hey, here's the agreement. and you know that you might have to make some adjustments, and then you have some ready-made adjustments where you don't necessarily have to go to your attorney because they're already approved by everybody. And then after that, there might be a few more changes that you do need to pass through the legal team or through other departments, and that's one way to deal with it. On commercial real estate side, so yes, we learn from transactions. So the thing with commercial real estate lending is it's been around for forever. So we know most of the issues that crop up. I would say all of them, but people always seem to be inventing new ways to mess things up. So we borrow from the knowledge of the past and embed it in the contracts that we have today. And then as it makes sense, we may adjust for the deal now. And if it makes sense to take what we learned in the current deal and move it forward, we'll do that too.
Okay. We have another question from Matt, or more of a comment I'll put out here as well to get your thoughts on. So Matt has mentioned, in the history of fintech, user onboarding has been such a thorn in bank sides because tech companies want high volume user growth to drive valuation. And there's truth to that. There is absolute truth to that. Yeah.
Ooh, that's a tricky issue, right? So, some of the issues with that are the bank has some regulatory obligations in terms of screening the customers that come into the financial system, right? So if you're going to bring a depositor in, and the depositor is going to be a customer of the bank has to reasonably know who that customer is, and there's a process they have to follow so they can reasonably identify the customer. And then there's some after the fact monitoring that often needs to occur as well, right? So if the customer says, I'm a consumer and I make $80,000 a year, but then 2 months down the road, they're sending $400,000 wires to Cuba, or trying to, or doing some really odd activity on their account, then there's problems. So there's often kind of a tension between the bank and the fintech as far as how far can the fintech go in deciding which customers to onboard and which to not, and how fast can you onboard them. And that can be kind of a tricky problem to solve. And so some of the strategies that we see people using is we might use a decisioning logic or policies where the bank and the fintech might actually sit down together and say, okay, here's the customer profile that we're familiar with, and here's the screening process. Here's the flags that we want to see. And, as long as the customer profile and the information they're providing us looks like X, Y, Z, then maybe the bank might be okay with onboarding that customer without their approval. But you also might set some thresholds where fintech does some pre-screening and say, okay, we think this one is okay, but then it passes the decision to the bank for a second okay. So the bank is meeting its compliance obligations, the fintech is speeding things up, and so that way you build kind of a process where you can clear a lot of the customers in a quick way, but then you're properly escalating some of the decisions where you're saying no to customers who shouldn't come on board. So similar decisions in lending and other types of services.
Yeah, it makes perfect sense. And I think about this, especially, I think the scenario you were providing was in the embedded finance type of space where there's partner fintechs onboarding into the banks. And absolutely, they want to move fast. They want to drive growth. That helps the banks as well, only insofar as it's done compliantly and with strict rigor. And that's just part of the banking environment. I have one final question. We might have to do this again because I have others, and this one is a little bit selfish, fully admit it, but I'm working with a few clients right now that are in the POC stage. They either have some POCs or they're gaining their initial POC traction. And the POC motion is something they want to use over and over again with customer acquisition. In those cases, is it okay to construct an SOW or a POC type of agreement using these tools that I know are challenging when there's not an actual commercial agreement in play? Or do you still suggest that a fintech reach out, look for legal expertise or a solution? Perhaps you might offer this in the future within your platform. What do you think?
I would take a look at making a risk-based judgment, right? So you're thinking about, most of the time I would lean to hiring an attorney to help you. And if cost is an issue, understand that the things you can do to reduce cost are, understand the structure of your services so that you can provide an outline, and you can provide an attorney have a really good idea of where you're going. And then an attorney who's really familiar with the financial services and fintech space should be able to, reasonable time, put something together that you can use for that deal, but also for deals in the future. So it's not necessarily that you're going to go to the attorney every last time to reconstruct your agreements. This is, particularly what we try to do is construct the agreement so that can be used and reused as much as possible. The other thing I would think about is, you can use it, but if you hand the agreement to a bank and it's so devoid of addressing the regulatory issues that need to be addressed, then I think you have a problem where the bank is questioning, how long have you been in business? Have you done this before? Are you really ready for the compliance aspects of financial services? And you kind of a credibility question. So those are things to consider.
I appreciate, first of all, the tips for saving fintech founders out there that might be listening some time and money relative to a legal bill. And just to recap those, because I think those were important. Know a bit about your business, the structure of it, outline it for an individual that you'll be speaking with for legal assistance. And secondly, likely most importantly, why not just work with someone that works in this space already? And that goes for any type of service. It's just common knowledge. But if you are constantly having to educate your outside counsel on payments and the way payment flows work, or I know we picked on onboarding earlier with Matt's question. If that is something that is unfamiliar to them as an area of expertise, it will naturally slow down any sort of work, therefore costing more money. Ergo, why we start seeing a lot of fintech founders go a different route. I know I said that was my final question, but I totally lied to you because we have just a few minutes left. But as far as POC development, if anything that you suggest that a banker put in an SOW if we're pre-commercial agreements, let me give you some examples. Things I've seen are phased scope of work, like deliverables, who's doing what, success metrics. Are those the big ones, or are there others that you might suggest if a fintech founder that's early stage comes to you?
Early stage. Well, I think a lot of that is driven by the quality of the relationship that you have with the bank, right? So if you've taken some time to develop a relationship with a lot of trust, and there's some give and take, that really helps to smooth out some of the issues. So yes, my milestones, phases of work, we're going to say, we want to build a product and it's not finished yet. But we know we want this piece first. You might focus on the first piece and build out the terms and the obligations, responsibilities of two parties between those two things. In that kind of framework where the kind of the end scope of work is kind of cloudy, we like to set up kind of a governance for it, right? So you say, here's what the bank's going to do, here's what fintech's going to do. Also, the bank is going to set aside 2 or 3 people, and the fintech's going to set aside 2 or 3 people, and they're going to meet every week, every month, every 2 weeks, whichever makes sense. They're going to examine the process. They're going to examine what works and what doesn't work, and they're going to have a framework and agreement where they can agree to adjustments, right? So, because the development probably needs to be flexible, the contractual obligations also need to be flexible, but there also needs to be some steering. So you might call it a steering committee or guidance, but there needs to be collaboration, and there needs to be some flexibility, and you need to build that into the statement of work agreement.
That makes perfect sense to me. Not that I'm trying to go it alone, Brent, but I was just curious about those pieces and parts, because very similar to agreements that I've seen or read over for clients, I see a wide variety of information when it comes to POCs as well, and what's included, what's not. And I thank you for that information on the best practices. So in a nutshell, I think we likely are here at time. We want to give everyone a chance to get back to their days, but I want to thank you so much for joining us. You have given tips for how fintech founders can save money, as well as for bankers watching out there, how bankers can save money using tools that you and your team have created. Again, the name of that tool is Banker's Doc.
Yeah, Bank Docs Pro.
Bank Doc Pro. Banks Doc. Okay, Bank Docs Pro.
Yeah.
BANKDOCS Pro. Got it. Wonderful. So reach out to Brent if you have any questions. Where can people find you? I know you're on the event circuit, Brent. Are you heading anywhere fun?
Oh, I think we're taking a break until the fall.
Okay.
We'll hit a couple of the major events a little bit later in the fall. Depending on what comes up, we might hit a few in between. You can go to our website, Farley Law, PLLC.com. If you can find an email address there to reach out if you'd like. Happy to chat. We're also on LinkedIn. If you have questions, you have comments, if you want to just take a quick few minutes for a question, happy to do that. Just go ahead and reach out, and we'll get back with you.
Thank you. You will find Brent is a wealth of information, and you just glimpsed the surface of what he and his team do here on this conversation today. But Brent, serving both the banking space with the platform, also the fintech space, full service legal firm that you will have. Just know his name, know his team's name, and feel free, like he mentioned, reach out to him with any questions that you might have before those fall events, and which I hope I get a chance to see you again there, sir. In the meantime, I'm going to wish everyone a fantastic day. You have one more day before taxes are due, before the April 15th deadline, in which Brent and I are in no way associated with that. But please, at least get them filed. All right. You all
thanks so much, Tracy.
Thank you so much, everyone. Have a fantastic day. Bye-bye now.